Imagine dark clouds forming on the real estate market horizon. Are we on the brink of a storm in 2023? Conditions are aligning and the signs are everywhere. Together, let's decipher the clues and understand if we're truly facing the next major real estate collapse. Brace yourself as we dive deep into the market's complexities, using data and insights to see what the future might hold for us. Before we dive deep into today's topic, click on the like button, subscribe, and turn on the notification bell. This way you won't miss any updates, shall we? Before 2023's arrival, the outlook seemed promising for the real estate market. Major outlets like the NY Times and CNN were running optimistic headlines about the steady appreciation of properties in various global metropolises. However, behind this veneer of prosperity, a bubbling cauldron of rampant speculation, alarming debt, and questionable fiscal policies hid. Were we on the brink of a bubble burst? It's intriguing to see how history tends to repeat itself. Just like in past crises, speculation emerged as the villain of the story. Buyers, swept up by the market's euphoria, bet on the perpetual appreciation of properties, accumulating debt beyond their means. And if this bubble indeed bursts, the ramifications could ripple throughout the entire economy. The disparity between luxury and accessibility became clearer than ever. Back in 2022, CNN already highlighted the growing chasm. While opulent skyscrapers rose in the skyline, many found themselves trapped in a spiral of unattainable rents and mortgages. And this scenario, it seems, not only persisted but worsened in 2023, making the housing issue even more pressing. In an alarming twist, as recently cited by Forbes, we've noticed that the real estate market, already wavering due to sky-high property values and rising interest rates, might be nearing a sharp slowdown. Amidst this backdrop, the average 30-year mortgage rate shows no signs of easing, advancing for the fifth consecutive period, reaching a staggering 7.57% just in the second week of October. The sale of previously constructed homes also doesn't look promising, declining for the third time in a row, a drop of 0.7%. This isn't an isolated situation. It's a trend spanning all key regions of the U.S., as underscored by the National Association of Realtors. And what's even more astonishing, even amidst such a slowdown, the market is still sizzling for buyers. With many property owners holding back from selling, hoping to capitalize on the still low interest rates, we have a clear situation where demand is vastly outpacing the supply of homes on the market. As we examine the global landscape, we recognize that several economic cogs played a part in this unstable scenario. As highlighted by the NY Times, the decision by central banks to raise interest rates was a direct response to mounting inflation. This hike, in turn, significantly curtailed people's capacity to secure home loans, making financing costlier and unreachable for many. At the same time, we witnessed a setback in the U.S. unemployment rate, which jumped to 3.8% in August, surpassing forecasts and the figures from prior months. This combination of rising unemployment and stringent fiscal policies further slashed consumer purchasing power. Thus, even with homes available on the market, the pool of potential buyers shrank, and the balance between supply and demand faded, setting the stage for a potential real estate sector crash. Amidst the turbulence of the 2023 real estate market, one question stands out. What role does the rental market play in this intricate economic jigsaw? Looking back, it's clear that the high cost of rent has been a pivotal driver in home buying decisions. As some people have noticed and are opting to do, is to purchase a property instead of renting, a decision fueled by the prohibitive cost of rent in their area. Over the years, urban zones experienced a marked surge in rents, driven by a scarcity of rental properties and a steadily migrating population flocking to urban centers in search of better opportunities. In this landscape, purchasing a property despite its soaring prices emerged as a more sensible alternative for many. For many individuals, being their own landlord seemed a financially wiser long-term option than falling prey to sky-high rents. However, this buying frenzy fueled by inflated rents only added strain on an already taut real estate bubble. And when this strain became unbearable, the bubble's burst left many homeowners at a financial crossroads. Thus, we discern the intricate interplay between the rental and buying markets, where fluctuations in one have the power to trigger chain reactions in the other. Looking ahead, based on the trends and data we've discussed so far, the landscape of the real estate market in the coming years will be one of transformation and adjustments. The high home prices, coupled with rising interest rates, might lead to a market correction. However, the persistent demand, partly fueled by high rents, suggests the market might not cool down as swiftly as some might anticipate. Moreover, the rising unemployment rate could have a cascading effect, impacting people's ability to retain or acquire new properties. This scenario suggests a possible surge in the number of properties up for sale, which could stabilize or even decrease prices in some areas. On the other hand, governmental policies and monetary interventions might be implemented to prevent a drastic decline and protect existing homeowners. The interplay between supply, demand, interest rates, and governmental policies will determine the path the real estate market will take. Therefore, for those considering venturing into this market, be it as a buyer or an investor, caution, thorough research, and expert consultation have never been so paramount. In summary, the real estate market landscape we observe is the result of a complex interplay between various factors: speculation, monetary policies, interest rates, rental market, and the dynamics of supply and demand. The potential turbulence of 2023 underscores the need to always be vigilant and informed. Decisions made today, whether to buy, sell, or rent, have profound repercussions on the socio-economic fabric of our society. The real estate market is a reflection of our economy, culture, and values. And as we've seen, even in the face of uncertainty, it is resilient. The future, although uncertain, also brings with it opportunities for those prepared to face the challenges. As always, knowledge and prudence will be your greatest allies on this journey. Before we wrap up, we'd like to ask that if you found this content valuable, please give it a like. It greatly helps our channel grow and reach more people. And of course, we'd love to hear your opinions and experiences in the comments below. Also, share this video with friends and family so more people can be informed and make more grounded decisions in the world of finance. Don't forget to subscribe so you don't miss our upcoming analyses and tips. Thank you so much for your support and see you next time.